The first week of February looking a lot like all of January. Tons of market volatility once again. David Kotok is here. He's Chief Investment Officer at Cumberland Advisors. David, it's been such a fascinating start to 2016, really. And I think some people thought after the worst January, it's going to all start looking better in February. No. And we should expect more as investors?
More volatility. Volatility, when you coalesce policy, which we did after 2008. We had the whole world on the same place. We need to stimulate, we need to expand central bank balance sheets, we need to keep interest rates low, we got to cure the banking system, we got to fix the foreclosures, the list could go on forever. Everybody was on the same page, no more. So you have central bank interest rates in one place going negative and more negative. You have the US hiking. You have a divergence, which is widening. Divergences raise volatility, convergences reduce it. We had the convergence, now we're in the world of the divergence, and we're going to get more of it.
All right, so as an investor then, how do you think about the best opportunities? Let's say Japan, for instance, because the Bank of Japan obviously made big news going negative, more negative, I should say. So what do you think about Japan right now as an investment? I
like Japan. We are overweight Japanese stocks. Think about it this way. What Japan has done by introducing a negative interest rate is declare that the interest rate in Japan on government debt is going to be zero or lower for the rest of the decade. Now, if you start there and you say, okay, what are my investment options in this country? And you say the Bank of Japan is buying a basket of Japanese stocks, an ETF. Let's look at the stocks. Some little companies like Mitsubishi or Toyota that people never heard of. And you say, okay, what do those stocks look like? They have an equity risk premium of 600 to 700 basis points over riskless debt. That's unthinkable. That is a gift to the investor class. The same companies have been lean and mean for 20 years in a country that's had slow growth, and they have a large amount of cash on their balance sheet, and they do pay a dividend, and the yield is respectable because in these days, 1% and 2% is respectable. We are overweight Japan. It's 17% in the index benchmark. We're at 30, and we're currency hedged on 2/3 of that.
Is that the highest you've ever been in Japan?
Highest ever. And in the international sleeve in our firm, we only use ETFs. In the international piece, we also have a sleeve of cash because we don't like the emerging markets. It's too soon to go fishing around there. So weight in Japan is high. I like Japan. I think Japan is a long pull, successful story for the investors in America who can buy a currency hedged ETF and hold on to it.
I want to ask you about some U.S. stocks, particularly energy, because we've talked over the years, and it's an area you've been in and out of. So where are you now in terms of energy?
Okay, well, you may remember we got out of oil and energy when oil was over $100 a share, $100 a barrel, and we're back. And we're back using several ETFs, and there's a bias in going back in natural gas. I looked at the ETF that has the natural gas companies. The symbol is FCG. The entire basket of the companies was for sale below the replacement cost of their infrastructure. You bought the whole property, you got the company for nothing. Now, we know that below replacement cost is an entry level in anything. Natural gas and oil are about to become export businesses in the United States after 40 years of no legal way to export. The first liquefied natural gas ship is loading and leaving in this particular week or last week, and this is ramping up. So you think about it the following way. If you were an importer of liquefied natural gas anywhere in the world, would you like a contract with an American company under American law with American disclosures buying a product that comes out of the ground in the United States? Or would you like to buy from the Middle East or Africa or Venezuela or some other place? Which one would you do? So what do we see? We see futures contracts, 20-year contracts, a ramping of the infrastructure. I think oil and gas is an export growth industry for the United States for decades. It will be huge. I'm a roaring bull on energy. I'm back in case you hadn't noticed.
Well, I must say you gave us some interesting and somewhat controversial investment ideas.
Very much controversial.
David Kotok, good to see you.
Nice to see you.
Thanks. I'm Rhonda Schaffler for The Street.